So just looking at food price inflation, 1.5% for the year, 1.2% excluding tobacco. That says to me that the COVID bout of inflation has passed through our economy.
Yeah, pleasingly for customers, inflation in our business has been very steady at around that 1.2% excluding tobacco for the whole of the 25 financial year. And we've actually seen now a number of categories that are starting to move into deflation, including in the non-food space like toilet paper and dishwashing. We've also got a couple of meat categories like pork and chicken that are also moving into deflation.
OK, so then you've got efficiency inside your supermarkets, you've got deflation in food prices, attracting more shoppers through the door. But the real trick here is even your e-commerce sales up by 24%. So those automated distribution centres, a deal you did with Ocado many years ago, is really now starting to pay some dividends.
Yeah, we're really pleased with the performance of the automated customer fulfilment centres. Their performance over the last 12 months has actually been ahead of our overall e-commerce rate, so the growth has been higher, and that's really driven by the proposition that customers are seeing. So there's more range to choose from. The products that you get last longer in your fridge, and you very rarely have a missing item from your order, and you put all that together and it's something that's very strong in the market.
So, Leah, I did a little calculation. You'd have seen, of course, the productivity roundtable the government had last week, and the Productivity Commission's idea that there should be a 5% tax on net cash flow. Now, I worked it out for you today. Your free cash flow, $2.93 billion, would mean you would have paid $147 million in extra tax. That's about 13% of the net profit of Coles in the last financial year. Is this a good idea for supermarkets or not?
So I think we would have a view that any conversation around improving productivity in Australia is a good and positive conversation to be having. But we don't believe that we're going to see improvements on productivity by taxing businesses more, whether that's small, medium or large businesses, because large businesses actually disproportionately drive a lot of the productivity gains that we see as a nation. And so we would like to see incentives in place to actually see more investment into areas like innovation, technology and skills growth. And we think that that is the key to seeing productivity going forward.
Because there's a reality here, just like GST when it was introduced. If you get whacked with an extra tax of $150 million, you inevitably have to pass that on to consumers, and they're the ones that ultimately have to pay the price.
It's a real impact to our business if it was to come in, and it would likely mean that we could invest less in the customer proposition and actually in productivity initiatives that we have invested in the last couple of years, like the automated distribution centres that we've opened in the last 24 months.
So just tell me, the view, the mood of your consumer right now, of your customers, is it improving to your sense? I mean, there was a real cost of living crisis going back 18 months or so ago. Is that starting to lift to your sense?
So cost of living is definitely still on the majority of Australian households' minds. But I think what's very pleasing is in our latest surveys, we've seen the first green shoots that sentiment might be starting to turn, which means that with things like the interest rate cut, customers are feeling a bit more confident about their budget going forward, and perhaps feeling a little bit more confident at spending on goods. And I think the food spend that we saw come through from the ABS for June at 6.3% is indicative of that customer starting to feel more confident. Time will tell, though, on how long it actually takes to drive changes in the behaviours that we've seen over the last couple of years, like shopping at more retailers and trading down to more affordable products.
I'll tell you what, Leah Weckert, good to chat to you today, and many thanks for your time.
Thanks, Ross. Appreciate it.